Welcome to the Journey Real Estate Market Roadmap. My name is Corey Robinson. I'm the founder of Journey Real Estate here in Marin County. So I'm shooting this in mid-August, reflecting back on July data and also seeing some interesting behavior in August, July and August are generally slower months here. And so we're going to show you what's changing. We're going to look at it from a national context and then break it down with some local information. And we'll finish off with your action plan and what it means to you, whether you're looking to buy or sell in Marin or Southern Sonoma counties. So starting out looking at a national context, affordability continues to be the center point of most conversations. We've had continued high interest rates that were around 7% throughout July. The first half of August, there's been some good news in terms of mortgage interest rates. We're down closer to about 6.5 right now. And that also applies to mortgage applications, meaning more people are submitting mortgage applications with each incremental drop in mortgage interest rates. But what's new is pending sales are showing signs of life, especially in early August. That said, the wall is still there. Affordability remains a challenge on many levels, but there seems to be signs of improvement in terms of mortgage interest rates, and it'll be interesting to see how the next few months shake out as our fall selling season is on the horizon. So taking a look at this chart, the blue line represents 30-year mortgage rates, and we took it back on a longer time horizon of 10 years. So you'll see historically, rates were lower, closer to 4 or 5% as the norm. They were artificially low during the COVID years when they got down below 3, which we do not expect to see anytime soon. 4 to 5 has been the norm in recent history. Go back to the 80s, we're talking 15, 16%. So it's all relative, but here's what it means to you today. The red line is existing sales. So you'll notice since rates have gone up, it's kept a lot of sellers sitting back, not entering the market, and sales have been down in general in terms of number of homes hitting the market. Since there's been limited inventory, there's still people needing to move. The sales price has remained stronger, which might be counterintuitive, especially if you're watching the news daily thinking that the sky might be falling. The median prices here in Marin have remained pretty steady despite the mortgage rates and all the other challenges we're seeing out there in the world today. All right, so that's a little bit of what's going on a national level, but more importantly for you here in Marin County, it's kind of a story of two different markets. So the blue lines here represent single-family homes, days on market, whereas the red line represents condos and days on market for condos. So you'll notice that the blue line has remained relatively low, meaning homes are still moving relatively fast. Condos have been a bit more challenged over the past couple years, and especially recently, due to some HOA issues. Some are having insurance problems. And then also there's just hesitancy for people to enter the market right now. So it's an opportunity zone if you're looking for a condo. So you'll notice at the very beginning of the year, they were moving on more similar patterns, and you still see some seasonal norms baked in here. But now it seems like they're on totally opposite trajectories. So what this means for you is if you're looking at condos or townhomes versus looking at single family homes, it's a very different landscape and we're implementing very different strategies. All right, so this chart shows you specifically the condo market and how inventory really has been high. It's been high for years. But as we're getting later into the summer months, you'll notice that inventory's down. There's more buyers seemingly jumping in. And I think it's a result of condo sellers pricing more accurately. They seem to be moving a little bit quicker. And we've also seen just in the first couple weeks of August that their pending sales are up. So this could be a shift in tides. The condo market might be leveling out a little bit and getting some upward pressure on pricing once again, which we haven't seen in a while. But we will see how the fall market shakes out. So this is where things get a little bit weird. This is the unusual August pattern that I mentioned early on. And looking at our market psychology graph, here's where things look a little bit strange. So first, if you look at the blue line, you'll see the winter spikes, where we usually see a New Year's slowdown where inventory kind of remains on the market a little longer. Now, if you look at the right of this graph, we see the New Year's spike is happening in August. So this is a forecast. It could change, but it's interesting because it tells the same story we see in the expectation gap. And when that red line is higher, that puts upward pressure on pricing, where it's now down a little bit lower. The pricing trend of continued appreciation is decreasing. So as inventory goes up and expectation comes lower, the market slows down a little bit. Could it be a summer blip, or could this be a new trend? We will see. So tune in next month to find out if the August spike is a once-in-a-decade event or if it normalizes out, and how price pressure is looking. All right, so this chart shows you the mechanics behind this strange pattern we're seeing. A lot of sellers waited past their traditional spring market when we see a ton of inventory, and it's been flooding in a little bit later. And what we're seeing is the blue line represents inventory and properties that are for sale. So this is the most active homes on the market we've seen for 3 years. Buyers have been wanting to see more opportunities. Now we finally have more opportunities. And that also creates some negotiation leverage. If there's a lot of homes on the market, we're coming up with some really creative things that get buyers into homes, buying down the rate, negotiating the price. So there's an opportunity zone right now. And the forecast shows what we expect is increased pended sales as we leave the summer slowdown. The sales should follow, which is the green line here. And that should bring inventory down as well as soon as some of these pended sales close out. So you'll notice what's different this year versus years past is the inventory level remains a lot higher as we head into the fall market. So buyers have more to choose from. And even if we see an uptick in pended sales as we have in the beginning of August and sales closing higher, I think there still will be some more choices throughout the fall season for buyers. And what that means for sellers is you have to be really strategic with your approach. So if it's not compelling, it's not selling, you need to make sure you work with an agent that positions your property for success, whether that be property prep or just intelligent pricing to make it a compelling asking price that will move in a market where buyers have choices. All right, so this graph shows you on the top, we're looking at single family homes, and on the bottom, we're looking at condos and townhomes. And what's interesting is if you look at condos on the bottom, the red line and the blue line are moving kind of hand in hand, and that's the average price point and the median price. And what that suggests to me is that the middle tier condos and townhomes are still moving, whereas I've noticed the luxury end of the condo and townhome market, close to nothing is happening right now. So it's really interesting. And as you switch it and look at single family homes, they're kind of moving in tandem a little bit more so. And the average price is a bit higher on the graph, moving in a different direction than the median price. And this suggests that the high-end luxury market, higher price points, seem to be faring quite well. And what I've noticed is that cash buyers are cleaning up right now. They're still participating. Mortgage interest rates do not play a factor for them. So they're seeing a lot of opportunities out there right now. So as we're evaluating the market, we're noticing very different trends depending on location, price point, property type. The condo market's performing differently than the single family market. So we're looking at homes for clients, especially buyers right now, on a property by property basis and evaluating what's going on in that hyper-local market, what kind of leverage we have, what the seller situation is. And that's why it's really important to work with someone who's well-connected and knows that there is a lot of nuance in this market. And there's also a lot of different strategies we're implementing versus the COVID days where everyone was just throwing their all cash offers, no contingencies at every property that popped up. It makes it a more skill-based market right now. So as we wrap up here, this is the market psychology graph again. And on the top, we have condos this time. On the bottom, we have single family homes. And the red dashed line tells us if the market has pressure for prices to increase or decrease. For a long time, single-family homes on the bottom chart here have had upward pressure. You expect prices to go up steadily. We're in one of the highest appreciating markets in the country. But those trends are changing a little bit. Recently, condo prices have been in the negative territory, and the market has been wanting prices to come down. However, for the first time in a few years, condo prices may be stabilizing a bit. This could be a minor change, or it could mean that the condo market is about to enter a new dynamic where prices could begin to increase again. I'd love to hear your thoughts. The key questions for fall presented to me are, will unusual August patterns normalize? Can the condo inventory find a ceiling? When will seller psychology adjust? Is the divergence we're seeing here, is it temporary or is it structural? Early signals suggest more negotiation ahead, and my optimistic outlook is September and October will be stronger months here in Marin County, as consumer confidence seems to be very slowly improving, mortgage interest rates seem to be slowly improving, and we seem to be moving into a little bit more stable environment But who knows? It's been an unusual year, and we will be tracking it every day. So please tune in for updates or reach out to me anytime if I can help you buy or sell in Marin or Sonoma counties.